She is the CTO of Correlation Ventures. And Grace, tell them else some more about you.
Yes, so as she mentioned, I'm the CFO of Correlation Ventures, so I'm one of the founding partners there. And what makes us different is we're using predictive analytics to help us pick our venture investments. And so with that, we have 400 companies we've invested in, and 15% of them have female and minority-led CEOs.
And that's
One five.
1-5, which is how many more points greater than an average firm?
7 times greater.
Okay, yeah, 7 times. So
Yeah.
she's doing some good work over there.
Yeah, and then, kind of my background, I started out as a finance person. I went to school, studied quantitative economics, and then basically I got a job at a large public accounting firm, and then one of my clients was a VC, and they were looking for a new CFO, and so I'm like, oh, I'd love to do that. And next thing you know, I'm in the Bay Area, working on Sand Hill Road, and then I meet David Coates, our founder, and he is talking about doing venture capital differently. And I'm like, I am so on board, and so I joined him 16 years ago, or actually 17 years ago almost. And so basically it's been just a joy to be able to back all these ideas. And so that's what's...
And what's interesting, Grace, is that you're basing it off of the data. It's
Right.
correlation. Talk a little bit about why you think your numbers are higher. I mean,
Well,
it's like, it's not as biased.
it's not as biased. At my old firm, we used to say gun to the head when we voted, and literally someone would point a gun at you and say yes, no, and it was very stressful. And now,
I can't imagine why not. Why?
and now basically we look at our score that comes out of the algorithm, and if it scores very well, like in the 90s, then we're like, we're gonna put in $2-3 million. If it scores not so well, then maybe we'll put in 100,000, 200,000. But basically, that's how we decide how we're making our investments, and so it's very, very pragmatic, and at the same time non-judgmental. And obviously, you have to have a lead, you have to have a good management team, and so basically, we have filtered out quite a few companies. So we're picking from, basically, we like to say we're a venture capital index fund. We're picking from all the other investments venture capitalists are doing.
Yeah, that's very insightful. Okay, now on to Ms. Silvia Mola. I believe you are an executive producer for this?
Associate
Producer. I was trying to upgrade you all the time, but you don't need an upgrade because she's a doctor. She's everything that you can think of as Silvia Mon. So Silvia, tell us a little bit about your connection to the movie.
Well, one thing I want to know, how much assets under management do you have?
All right.
Oh, 500 million.
Is that it? 500 million, that's amazing.
Drop the mic. You don't hear that ever for a woman fund manager. So just like unicorn yellow here in San Diego. So sorry, I'm your hypoman. Always. And I'm also going to be an LP in their fund. So that's a very good example of what women do for each other, is that we invest. We show up for each other. We show them the money as much as we show other entrepreneurs.
We have Entine and Nassim, my partner,
Yes.
is on the board.
Oh yeah, Nassim just joined the board of Stella. So Stella Foundation is the organization that I founded about 12, 14 years ago. Very exciting. We are an accelerator for female entrepreneurs, but also an accelerator for female investors. We have about 130 investors that come to us to learn about how to invest in the angel asset class, and then they invest in other female entrepreneurs. And I'm sorry, I lost my voice because I was at a national dance competition with my daughter, screaming all weekend, so that's why I lost my voice.
Wait, how did she place?
Thank you.
She placed 4th nationwide. You'll be seeing her on the field at Washington State University next fall, so very exciting, thank you, as a D1 athlete. So I think all of us have stories of our children, of our families that we're equally as impressed with as what we do in our lives, and that's super important to me. I have been here in San Diego for too many years. I came here for a PhD, so I have my PhD in biochemistry, molecular biology, working on sea urchin fertilization proteins. Yes, sex in the open ocean, okay? Coming from being a mammologist, I skinned and trapped rats and bats for 3 years before coming here, so watch out. I came here and started just a science degree. I loved science. Within a year, I had my first child. Not the best idea, 23-year-old people in the room. But love that and love the ecosystem here in San Diego. Stayed at UCSD and then kind of started going into commercialization of university discoveries at UCSD in the engineering department. And then little by little, just love the startup world. Got my MBA ready. Who's at UCSD? We need to get some yes. Any ready MBAs? That's good. I lose my voice because I'm still screaming. So I became an investor about 12 years ago, 2010. My second investment is here in the house. Yes, Felina Hansen at Hair Hub. So I only invest in female-led businesses and people of color, period. I have 160 plus companies in my portfolio, 7 exits, and I've also invested in 12 emerging fund managers. So that's kind of like my...
And you're an author of a book.
Yes.
About investing.
Yes, about investing. But I love the academic world as well. So I'm the Director of Innovation at Biola, the Bible Institute of LA. So it's basically a seminary that I teach at. So very exciting about that.
Yeah.
And what is my role in the film? I knew there was one last thing. So associate producer. So you saw these lovely ladies that produced the film. And in this women's economy, we connect with each other, we believe in each other, we invest in each other in any way. So when she came to me, I was like, sure, I'll invest, but I need to know a little bit more. I didn't even see the movie before I invested. Don't do that either. But we saw a lot of the deal rooms and all of that. We had about 3 other ladies that came in with me. So it was really nice to be able to have a cadre coming in, investing in this movie and supporting the wonderful movement that is being done right now. I mean, we're rock and rolling. I think it's now 8, things that we all have won. Documentary awards.
4.
4, so I'm
4
double
best
that.
documentary awards.
As an investor, they're so amazing. Their attraction is amazing.
Yeah.
But no, 4 awards of documentaries. So really good stuff. Not just it's a great thing. It's warm and fuzzy. It's actually they're getting those awards that are just fantastic. So.
Yeah, and by the way, Lisa, I think we're doing a showing of the movie on Friday. Is that right? This Friday? So we'll confirm that, but obviously we're talking a lot about a movie that we want you to be able to see. And if I didn't say that in the outset, this is for International Women's Month. And with that, I'm going to introduce John Majeski, CEO of Portola Valley Investments. And John, give us a deep dive on you. You come down, he's a pilot, he didn't fly down this time, but give us some insight about why you're here and what you hope to achieve tonight.
Yeah. Certainly glad to do that. I have to say, after hearing these introductions though, I guess the only thing I can say is better to be lucky than smart. Because this is pretty incredible to be sitting up here with these fabulous people. Anyway, about the movie first?
Yeah. How you got involved with the movie, and then we really want to hear about your background and what Portola does.
Yeah. So it's really interesting. As far as the background for the movie, like you, I didn't even see the movie before I invested in it. Yes. But a friend of Catherine Gray, who made the movie, who I've been co-investing with for years in Silicon Valley, she said, this might be really interesting to you. And she made the introduction, and after I heard about the mission that Catherine was on with this film about empowering women, as a person who raised his daughter in San Jose, I thought this is really interesting. I didn't know that the rate of investment was as abysmal as it is. At only 2% of venture capital going to women. And as someone who founded a venture capital fund in a firm, my theory was I'd rather place the bets where everybody else is not placing the bets. And there are certainly some incredible women founders that we've met. We're still always looking for women-founded and underrepresented founders to invest in. We've deployed one fund. We're raising for our second fund. We also have a small impact fund. And let's see, what else?
Well, I just say, as you're saying that, it's making me think about, investors tend to go to emerging markets to invest. I think we should look at women as this emerging market. If we poured all of our money into the potential of untapped opportunity with women, then definitely a positive.
Yeah, and I guess just as far as my background, I've been a serial entrepreneur pretty much most of my life. I've made a lot of big bets, I've taken a lot of chances. Was formally educated in law and business. And after clerking for a large law firm and interning, I said, you know what, I want no part of this rat race. And sort of as a self-taught technologist, I built my own business, ended up exiting that business. Then that business that I exited to, I joined that, we exited that to another. And then ultimately exited a business to HP, and I exited the business to Dell as well. Stayed on at those large companies and did corporate venture capital work. And it was really funny because when I was acquired by HP and they said, we're going to anoint you as the CTO, I thought, this is really cool. I'm going to invent all this stuff and have all these resources. And what being a CTO at HP meant was acquiring companies and making investments and stuff, right? Because any large company's path to innovation is acquisition, period, full stop. So when I look at companies to invest in, I'm always sort of looking, what is the ultimate exit strategy? So many companies say, well, you know, we're not thinking about that yet. No, you need to think about it out of the gate. It's, you know, so looking for companies with exit strategies that have diverse teams, diverse founders, is something that's really core to who we are.
Yeah, and you were gonna say something, Azin.
Oh, and I'm not sure if this is necessary, and I'm just going to take something that John, you had said about, and we've been keep talking about investing in women and women as emerging markets. And this room right now, by the way, I've been in lots of rooms for Show Her the Money and different venture startup ecosystems, and they don't look as beautiful as this. And so congratulations to you. Not that gender equality, skin color equality, or diversity, all of that. So it's really great. And I would say what we say at Emmeline Ventures, because we over-rotate on the female. We invest in sectors that support her health. We only invest in female founders, and we try and bring more women in as investors in our fund. And we're 3 female GPs, so it's women all day long. And at the same time, we want to make space for men, because if we solve the problem, or if we support women, we're elevating her, and then all ships rise at the end of the day. And so that's why, because I'm looking at some of the men, I don't know, I didn't wear my contacts in my glasses, I actually can't see. But I was thinking that some of you are thinking like, oh, why is this important to me? But it is, because when you elevate us, and you know this from your own lives, I'm sure, either from your mother, your sister, your spouse, whatever, when you unlock her potential, everything is better.
No, that's pretty powerful. John, I wanted to start with you. It's about the tangible value of DEI. I think, this week, especially if you've been watching the headlines, there and recently actually, is that it's been called into question the value of DEI. So can you talk a little bit about how do you value DEI?
Yeah, I mean, I guess I'll start with with a personal story. So the company that I was a partner in, that we were fortunate enough to sell to HP, we got to a point where we got to $100 million in revenue a year. We were profitable. We couldn't seem to scale beyond that, no matter who we hired, who we fired, what marketing initiatives we did, what types of promotions we did. And then, and we were really stuck, so I decided to do something a little bit different and hire an industrial psychologist. I said, I don't understand the problem here. We all get along so well. We agree on everything. We're like a big family. We party together. And after doing Myers-Briggs assessments, all sorts of Rorschach tests and all kinds of stuff, he said, I've found the root of the problem. It's actually pretty easy. You guys are all alike. And we were all guys who were all alike. There was no diversity. There was no different perspective. There was no healthy tension in the company. There was no challenger.
No pushback, right?
No
it's a
pushback.
monoculture.
Oh yeah, totally a monoculture. I mean, I thought it was great, but
Right, yeah, it was as passive.
yeah,
right?
it certainly felt great,
Yeah.
but it wasn't doing great in terms of the business. So we really mixed things up and brought in a diverse workforce, diverse perspective, and suddenly our revenue just started to grow exponentially. So I saw the value of it before. And this is 2006, 2007-ish. This is before DEI was even really a thing. But I realized that mixing it up was the key to success. So fast forward to today, and again, in thinking about that these large companies, their path to innovation is acquisition. They're also looking to improve their DEI statistics. They need this. right? So not only is the company more likely to be successful and to scale and get a great product or service.
And women are nurturers. This is why that women only get 2%. And so I'm going to just throw this out to the panel, and also you, audience. Please, I'd love your comments as we start to narrow down on the panel. Come over this way, I'll hand you the mic, you can ask questions too. But, I mean, what do we do with that information? What do we do with that?
I have lots of comments, but I'll let it.
No cursing, so no cursing on this panel. So
No, there's no cursing. Oh my God, I can start if you want to start. Okay.
I mean, most of you guys know I'm Latina and Italian, so I'm from Caracas, Venezuela, so like there's nothing in front of me that can stop me, personally. But what I have learned for women, that I've gotten that a lot about nurturing, because I am more of a servant leader. I get that all the time. You're so nice. I'm like, I'm really not.
No, really, come close.
Because as they said in the movie, we want to make money as angel investors. We want to challenge the entrepreneurs that we invest in to have their return, because we want them to be wealthy. We want us to be wealthy, right? Right? Aren't you doing this to make this world a better place? Yes, thank you.
Thank you. She's my student.
I love it. So I think that that's something that, as a nurturer, I thought it was a negative thing. Women in the room, and also immigrants and like minorities. I'm Latina, I'm married to Chinese Mexican, so like we're in the UN, in my home. So nurture is not bad. Nurture is not bad. You can nurture your the people that you sell to, your customers. I'm very tired. Your customers.
She's tired because did anyone see Fox News this morning? Okay, right here.
I had like 3 hours sleep last night,
Yeah.
as per usual. You can really take that nurturer to make sure that you bless your customers. If you bless your customers, they love your products more. They come back to you. Oh, revenue grows. Wow, that's amazing, right? So I think for me, growing up and knowing that nurture is bad, it is not bad. It is about building community and building your customer base. So that's like I can go on and on, but that is one thing that I think is a very tangible thing that you can change in your brain, how you think about nurturing.
Awesome. I think that's super insightful. Hang on to that mic. Okay, so from this side of the house.
Give it up.
Yeah, from this side of the house, I have to say, I just roll my eyes. I say, like, all I can do, it's like, if you want to,
Yeah.
what we have been learning and what I've been learning over the past year and a half, we've been working very deliberately on Emmeline Ventures and Fund One and bringing more people into the fund. We have just focused on the women because they get it, that's our audience, and if there's naysayers who don't understand, that's fine, because that just means that there's more opportunity for those of us who do. And so, yeah, thank you.
Yeah.
And that's really, I think, almost all I have to say on that point of just and that kind of, you can take that when you are building your company and you're hitting those no's and you're talking to the people who don't get you and who don't understand, just cut your loss quick and move to those who are your tribe and who do get you.
Yeah, I think that's, yeah.
Yeah, and I think, just on your point about nurturers and builders, I think that when you're talking about an early stage company or founders or teams, you need both, right? I mean, you need to build, but you need to nurture those people to grow at the same time, right? And they need encouragement, and like all of you, we don't like to blindly deploy capital and hope for the best and roll the dice. We like to get our hands dirty, get in there, work with the founders, coach the founders, and the way that we look at investments in general, it's about the founder first, then the team, then the product. I don't care if it's the world's best game-changing product that's going to solve all sorts of problems. If the founder's not right and the team's dysfunctional, and you have some bad actors on there, I'll pass. So.
I hear it. Okay, so I think we're going to open it up to some questions. So if you have questions or comments, you come on this side, and we'll take those questions. But go ahead and pick.
Yeah, I would say, as people start to walk up, I'll give something that I guess it is being recorded, but I want the startup founders here to hear, because I keep hearing the idea about going after venture capital, right? Like venture dollars. And I am going to just remind you, there are many ways, there are many sources of capital that you should want to consider before you consider venture. When you consider venture, make sure that you know what venture asks for and what that means. You need to have a highly scalable solution that is in a large and growing market. And there are a lot of constraints, and there is a fund, any of us, we invest in ways that are gonna make our fund lots of money. And that might not actually fit with your business and how you want to grow your business. So I'm just throwing that out there for some thoughtfulness.
I just add on to that, I mean, I really believe that there's such a thing as the right money and the wrong money. And as tempting as it is for an early stage company to say, wow, we have an offer, we have a term sheet, we're gonna take this funding, really evaluate it, make sure that the investor is like-minded and that they're aligned to your vision, your goals, and that they're actually going to provide some of that nurturing as well as the building, and they're not just gonna write a check and then, you know, fire up a lawsuit when things don't go so well. So,
In some cases, maybe you talk about those that even shouldn't take money, right?
Yeah.
I mean, that's a segment as well, right?
yeah, well, and I think that there's, you know, one of the elements that I like to look for is grit. And to see founders who have bootstrapped something, they've mortgaged the house, they've maxed out their credit cards and things like that, and you know, and I've been there myself with that type of thing, where when I was part of, it was actually the company that we ultimately sold to HP, where those of us who were partners in the company actually had to max out our credit cards, take out no equity loans, write checks to make payroll, and we were wondering, is this really gonna make it or not? So people who have been through that and have had that perseverance, you know, there's something to be said for that. So it's not like, well, I've got a startup idea, I've got to go get some capital. So you can do it yourself. If you have to work 2 jobs to fund your startup in the background and get it going till it gets some wind in its sail, that's all goodness. So,
And I was just gonna add on to, you can see, bootstrap it yourself, find friends and family, many of us don't have that friends and family, and then think about partnerships, your customers, partners who might actually want your product, like a CVC or anyone, like, there's opportunities to get money that is not venture money if you're creative.
yeah.
Silvia.
No, I was gonna say there's a question, but yeah,
Like non-dilutive capital, that's the first question I also ask for early stage startups that are pre-seed, and like have felt the pain, not that I want you to feel the pain, but like have you asked friends and family, even if you can't get that money, that's okay, have you asked? Have you done everything that you can to do that? And then it's like, now I know that you're gonna be a good steward of my money. That's not just to be like, oh, you have to do it. It's more of like, are you really gonna steward my money as you steward yours and your friends and family? Oh, very cool. Thank you for doing that. Now we can have a conversation. And then the other thing is non-dilutive. Some of them that could be going after non-dilutive, but like, no, we're gonna wait. I'm like, why are you waiting? Like, let's, if you don't have the resources, let's get the resources, and yes, build a great grant that we can get together, great. But if they haven't tried, that's when it's like a non-negotiable. It's like, let's do that first and then come back and talk to us. And also don't forget about equity crowdfunding and crowdfunding in general, not for everybody, but like Kickstarter for crowdfunding and WeFunder and Start Engine for equity crowdfunding. So don't like poo-poo on them. They're good for some startups, not all.
Yeah, speaking of no poo-poo, let me ask you this. What a segue. So, of your portfolio, and this is really for everyone, but maybe mostly for Silvia, I would imagine a large portion of the women are reticent to ask. There's some, you know, do you see a segment, well, how much of that contributes to the low 2% of women being funded? Is women saying, gosh, I don't want to take someone else's money, or do you ever see that?
I'm like, are you kidding me?
Yeah.
No, I'm serious.
Do you wanna answer
You
that one?
answer it first.
I'm like, okay, I'm just surprised at the question, no. No. Women are asking all day long, they are
I
exhausted.
did say it was a poo-poo
Oh,
question.
thank you, okay, I'm sorry, it was like a toss-up for me to like whack out there.
Yeah.
No, women are asking all day long, our deal flow buckets are overflowing, they're overflowing. There are so many amazing, incredible, great ideas out there that are being founded by women, and they're just not fitting the pattern matching that traditional VC has.
Yeah, and I guess, but in all seriousness, I think this is why I really want this group to participate in the questions, because I know you have them, right? So, come on up, because the question that I just asked, I was being a little facetious, but the reality is, there is some bias about, okay, listen, maybe women are trying very hard. I want to hear those questions.
Yeah.
Like, no, you're a nurturer. Let's have a real conversation. Let's get to the root of it.
Rose has a question. Come on up. Oh, come on up.
Yeah.
Yes. Okay.
Yeah. Wonderful session, thank you. This is so enlightening. I'm an investor, I invest with Stella. How do you ensure that the women-led or founded companies that you invest in keep in mind that there may be lowballs in terms of exit, like or valuations, expectations? Because I find that a lot of the later stage female-led companies that are looking to exit are getting a lot of lowball offers and they're disgusted with it. So how do you coach them through that?
Go for it.
I'll start and Silvia will
Yeah.
bring it on home, I think. I think first, I'm gonna answer that differently and thank you for the question because we're getting lowball, they're getting lowball valuations to start and to finish. So it's the entire system. And so in our mind, as we and Stella and all of us are building these venture funds that are expanding the pipeline opportunities in the pre-seed and the seed stage, we are very thoughtfully thinking about moving ourselves down the track to Series B, C, D, and exit to make sure that we can push those valuations to the right place.
So 2 answers to that. I mean, Rose knows me really well. One is community. So we have, Series A partners that go for the next round of funding after Stella, and then the next and the next, so that they are not lowballing, right? They're not lowballing every step of the way. So that's one thing. So don't go away from your community, lean into the community. Secondly, there is similar to like what we're saying, like there are different ways to fundraise. There's different ways to exit as well. So like one of our exits, she really was very, very mindful of her team. She's like, I want my team to be acquired. It wasn't that she was really going after that huge exit. She's like, I want my whole team to be hired. I want it to be more of an acqui-hire. And that was very important to her because she built culture around like there's a reciprocity between everybody on their team. There was a give back to their customers. It was so ingrained in what she was doing. So I don't think it was a low ball in her mind. It was more of that was something that was incredibly important to her, going back to your value system. Every step of the way, those investors are aligned to their values. And so when that exit happens, that there's an alignment of values. So I know that's kind of like a little squishy, those 2 answers, but that would be my 2 answers that I've seen with the exits that we've had.
And I was thinking that we had one female founder who she got an exit opportunity very early. I'm like, wait a minute, this is way too early. She's like, what? It's for 250 million. And I'm like, oh, but she waited and she ended up selling for like 750 million, like 2 years later.
It was also you. I think that's what I see is that you actually talked to her.
Right.
Because if she was by herself, she would be like, I'm out of here. This is what the culture is telling me to get out early.
Right.
But you said pause.
Right.
Let's wait.
Right, because basically it was the potential of what she had developed. And I'm like, but you haven't fully implemented it yet. And when you do, you're gonna make even more, so.
I think, I think that the other thing here with this is that this is an issue that exists across founders. Even with the startups that I had, even the ones that failed, they all started with really low ball offers. Some of them I just passed on and the company failed, mistake. But others, you'd get an offer that in hindsight was 2% of what I ultimately, got for an exit. So I think that you have to, sort of stay the course. And I think the other is getting the word out. If I had to do it all over again, education-wise, it would all be marketing and sales, marketing and psychology.
Yeah.
Because if you can get your story out there in a way that people relate to, especially those who are acquiring it, that's really, that's sort of what it's about. And then the other thing I wanted to add on about sort of women and, just the funding and stuff like that, something that was really telling to me that this was a problem. When I decided to invest in the film as a producer, I started telling some of my male counterpart what I was doing. People who I thought were, my friends and my allies were saying, are you crazy? So, and to date, I'm the only male producer in the film, the only male investor in the film.
Thank you.
For the recognition, but I mean, I'm just saying that it really underscores, that there is a real problem here. So if you can't even get it for a film,
Which is why I think there's another underground conversation. And again, I think Startup San Diego community prides themselves having real conversation. So, listen, if you didn't have that question that you want to ask, come and talk to these guys, ask the hard questions. We got one more. So we have 5 minutes. We got to, can you do it super quick?
Yes.
And then the panelists, while he asks his question, we're going to get ready for any comments.
All right, Austin.
Thank you. So one of my goals in life is to see the world be more egalitarian than it has been so far. So thank you guys all for the work that you've done to do that. My question is, what is the conversation to investors to kind of get them thinking about and interested in those underserved markets? Because there's no shortage of underserved markets. So how do we really like get that conversation going and get them engaged with those people?
Hopefully, what we're doing here tonight is step one. I mean, I think that's a prerogative. Anyone
I have a
else?
quick answer.
Pattern recognition is one thing, so there is so much pattern recognition over the years that if we can break that pattern, you see different people standing in front of here pitching, you see different, you took it to your friends. I would say that maybe the second or third or fourth time they're actually given something like that, they might invest, but you took the first step. So I think that those are the things that I see, is that you think that it has to be this like ginormous step. It's just like that little step. I know that we've done a lot of work at San Diego Angel Conference to take out bias in question and answer. And it didn't take the first year, it didn't take the second year, it took the sixth year, that even this year when I was doing, we do this like thing for the semifinal round, and an investor came up to me there, he said, I'm asking actually different questions now that I've heard it so many times. So that's a win for me, right? It's like, that's huge, right? So it's like those little teeny weeny steps is what all of us are doing, and your step also that you're saying, I want to see it, that is also important. So thank you for doing it, and thank you for your question.
Austin. All right, excellent. Okay, so we got started late. We're supposed to shut this down in about 3 minutes. So just quickly, across our panelists, I want to hear, if you were queen of the day, what's the one thing that you would change to make this different? And John, you don't have to be a queen unless you want to.
Well, I just finished the series of The Crown, Queen Elizabeth, so I decided, being a queen might not be such a bad thing. But anyway, gosh, no, what you had just said about the egalitarian world, I mean, that's music to my ears, because that's sort of how I kind of float through the world, thinking that, it's kind of an interesting story when you talk about a company in terms of, sort of what the founder's capabilities are, what the team's capability are, what the product's capabilities are, versus, well, they went to this school and they have 26 degrees and they have all this stuff, or they were a C-level person. Take that stuff out and just focus on people and what people do best. And I think that if I could see a change like that, that makes me happy. When I go through a pitch deck and I see 3 to 5 of these things a week, when I see ones that just say, hey, here's the founder, here's my vision, not, I'm so great, I went here and I went there and I accomplished this and I conquered the world. I think that's, if we could get to a world more like that, that would certainly do it for me.
So we heard at the very beginning that she has, how many assets under management? Say that again. I just love every single time. I want 10 of her. Right?
100.
100.
I want 500 million.
Yeah. I want so many other women fund managers to do exactly what she did, and not the amount of time that she did it. I mean, amazing pioneer, right? But we need it in shorter amount of time, and we need institutional investors to put up that money for those fund managers, that they really are proving that they have a different business model and they're investing and they're actually getting better returns. Listen to them, and I want that to happen. If I had all the money in the world, it's like I need 100 of them at 500 million.
Excellent.
Yeah. So in the movie, she comments on the fact that, there's a large increase in wealth for women coming up. Is it 2030?
2030.
And I think about, wow, wouldn't it be great if we could look around the room of the investing, not you guys, not the startups, but like the investor side, and see 50% women. That's what I would love to see. Because I can tell you for a fact, anytime I go to a conference, it's like 90% men, and then me. It's like, wow.
But you are an Iron Man, so.
Yeah. And so that's what I would love to see. Yeah.
hold up.
Okay.
Thank you.
So for me, I started off mentioning something about Catherine mentioning that money is power, and I added into that education is power. So what I want to see is related to that, because the inequities that we see in the venture system are the same in PE, are the same in entertainment, are the same in climate, are the same in like wherever just about you want to look, there are these inequities going on, and that's wrong. And so I want to change mindset and give education on investing, and I want to use this film because it's a beautiful 86-minute nugget of information that like tugs at your heart and opens your mind. And I want to develop curriculum around this and push it into high schools and junior highs so that all young people are exposed to this asset class and all young people know that they can be involved in it.
Yeah, that's impressive. All right, let's give it up for this panel. Lisa, are we doing screening this Friday? I know we were considering it. Yes, okay, so go attack Lisa right now and ask her what those details. No, better yet, don't attack her. There you go. It's on your honor.
I don't know.
This QR code takes you to a link. We'll also be sending out a thank you email with links and whatnot. But for $20, you can watch at any point this weekend, but it's going to start Friday evening. And then we have a Q&A with a panel. And I don't have the exact time, I'm sorry. It's like around 8 o'clock Friday night. So if you want to watch it and then be ready for the Q&A, it'll be a Zoom type opportunity to ask questions to producers and people associated with the film. So we're thinking the film will inspire even more questions or comments, and it'll be a great opportunity for that. So
Awesome. And then please, a hand for Lisa Brinoff. 1 year, she's been our executive director. She's done a fantastic job. So give it up to her. And board members, if you're board members from San Diego, please raise your hand. They're around. Have confidence. How do you get involved? How do we make their dreams come true? Now go home. We're really just getting have food, have drinks.